Hey everybody, this is Mark. As we approach the class here, we have class starting February 14th. So all the people that are still kind of on the fence, I wanted to run through two different looks here. Everything we had from last week, the week of February 6th. I want to go through with one market, dollar yen, that had a model direction, which is the longer term model we base everything off of. And I want to show you with what you'll learn in the class and what materials you'll have to work from, what happened in dollar yen. And then I'm going to work on a model that doesn't have a direction, crude oil, and show with the shorter term focus what we would be able to get out of the market. So let's start. Dollar yen. Coming into the 6th of February, we have a long model direction, which means we want to be long dollars. The entry is 112.44. And don't worry that some of this may or may not make sense. I just want to give a quick summary and show you what's here. What we're looking for is bottom edge buys in dollar yen. That's all we're looking for. We're not looking to sell dollar yen. We're looking for bottom edge longs. So right off the bat on Monday, we have this bottom edge, which comes from the week before. Price does not hold. It gets a small reaction, and that's all it gets. And then the model, well, not the model, the bottom edge gives way. That's fine. What do we get? We get the next look at a possible bottom edge. So this is late Monday, early Tuesday. All right, so everybody follow along with me. 111.70. That is now bottom edge. This bottom edge at 112.25 gives way. No longer there. Model never is at risk. Stop is well within price here. But we now have a second bottom edge to play against. So watch what happens. So everybody see that bottom edge. Bottom edge doesn't get handled again until Wednesday. So this is put in Monday afternoon, Tuesday early Asia. And then price rotates back up to model direction, model entry right here, 1244. Next move down. Just all we're doing is balancing within a tight range here. Here is your opportunity to deal long side with the model. Now follow along with me. This occurs on a Monday. Your entry is on a Wednesday. All right? Your entry is on a Wednesday. This move from Wednesday to Friday, one trade with that entry, 111.70, closes the week at 113.60. Not a full $1,900 because it's worth a little bit less, but it's about a $1,600 trade. One standard lot, one trade. If you're trading the futures, it could be worth a little more, but you get the idea. One trade from bottom edge action, full rotation up to end the week over 2 days, $1,600. It's a pretty nice little trade there for a couple days worth of work. And it was all very well thought out and diagnosed in the model direction. Now I talked about something else here. A market that may not have the model direction. So let's look at crude oil. Crude oil did not have a prevailing model direction until Friday. And I know some of you are going to ask a question, what is this model? What is this model? Don't worry about it. It's a model that you'll see in the class. You will see the model in the class. You'll learn all about it. So here's what we have coming into crude oil for the week of the 6th. All right, this is what your chart's going to look like as you start on the 6th. All you have is a top edge and a bottom edge. You do not have a prevailing market direction. You do not. In fact, we were even thinking about the possibility of a higher edge hold here that never developed. So there's top edge action in crude, and here's bottom edge. This was the bottom edge potential hold. So as the market goes to make its decision, right, these are all concepts you're going to learn in the class. Who's controlling the market? At what points do I need to see the decisions be made, and what direction does that model make that, or not model, what direction does that market make its decision? So as I said, coming into last Sunday night, Monday's trade, this is what we had in crude oil. You had top edge action, bottom edge. What decision does the market make? Who wins this market? Sellers win it. So all you're thinking until they don't win anymore is sell side has won this battle. So now you're looking for top edge action to get short against, or breaks of bottom edges to then sell the tap back to. So follow through with me. This is Monday. We don't know what's going to go on here. We're playing for the possibility of bottom edge holding. It doesn't hold. It gives way. Now we have our direction and our clue to start the week. Tuesday, Look at your top edge action to sell against. So this is about 4 hours worth of time it spends up near 53.20. Allows you 4 hours to get short. 53.20 rotates to a low of 51.22 within 24 hours, doesn't it? That's 24 hours for $2,000. One contract. You didn't get short in that one. All right. How do we still get into these things? Bottom edge, break of bottom edge, and a tap back to it. What does this one pay you? What does this one pay you right here? Right? Bottom edge. Bottom edge. Here's your bottom edge zone. Here's your breakthrough bottom edge, tap back to it. Right to the bottom edge there. This is an entry at roughly 52.90, 95. Where does that move? That ends up within a day up $1,700. One day. One contract, one day, $1,700. You didn't get that one. Where's the next one? And we continue. We continue to draw bottom edge, top edge. That's all we're looking for. Here's another bottom edge, top edge combination. Right? Market's marking price lower, top edge of consolidation, bottom edge of consolidation. This allows you a sell right before API on Tuesday afternoon, which then takes the market to its overnight lows. That was a very quick move. That was a $1,000 move from bottom edge with the direction. These are all concepts we're going to cover in the class. You want to see where this turns? You want to see where this stops? Let's watch where it stops. This is Wednesday morning waiting for crude inventory releases. What do we notice about this low? It never gets challenged. At 10:30 it's released and it's a bigger build than expected. It never gets challenged. What do we notice about forward top edge? It gives way. Once that gives way, what do we know to be able to play against? Former top edge, setting you up long side, right? This is 52.30. Look where you are in less than 1 day. You're right back at this edge. That's 53.20. That's $900. So this move, 2,000. This move, 1,700. This move, $900. All with the concepts I'm going to teach you in this class. Right? These levels were drawn the week before. This level was drawn on a Monday and Tuesday. It comes back into play on a Thursday. You're going to have these levels on your screen well in advance. And as we end the week, it's pretty unchanged. It's right back at those mid 53, high 53 levels. But there were lots of opportunities in between. Now coming into the start of the new week, Monday, the class starts on Tuesday, February 14th. We have a new model direction of long crude oil. All we're looking to do is buy bottom edge dips in crude oil. That's all we're looking to do. So I hope you come check it out. We have a live open session on Tuesday morning before the class starts, our last opportunity to get in there. If you come in now, you get Monday's class. You will be involved. But we have one last opportunity to see this on Tuesday morning, and then class starts Tuesday night. So I hope you join us. Cheers.